Hi there, and welcome to our channel. Today we're breaking down home equity, what it is, how to calculate it, and how you can use it. Did you know that thanks to rising home values over the last decade, US homeowners now have trillions in home equity? But what does that mean for you? Let's dive in and find out how much equity you have and how much you could potentially access. Home equity is simply the difference between your home's current market value and what you still owe on it. In other words, it's how much of your home truly belongs to you. If you've been paying your mortgage over the years, your equity has likely grown, especially with recent increases in home appreciation. For most people, their home is their biggest asset, but much of its value isn't easily accessible. Turning some of that equity into cash can be a powerful financial resource. You can use home equity funds for things like paying off debt, handling home repairs or improvements, covering medical bills or education costs, or building an emergency fund. Calculating your home equity amount is straightforward. Just follow these simple steps. First, estimate your home's value. The most accurate way is to get a professional appraisal by a licensed or certified appraiser. Appraisals usually cost a few $100s, but if you want a quicker estimate, online tools can give you a rough idea. They're free and easy to use, but keep in mind, these estimates can be quite different from what a professional appraiser would say. Your property tax assessment can also give you some sense of your home's worth. Next, figure out how much you owe on your home. This is the outstanding balance on your mortgage and any other loans you have on your house, such as a HELOC or home equity loan. You can see your balance on your latest statement on your mortgage company's website, or you can give them a call. And last, subtract your debt from your home's value. For example, let's say your home's estimated market value is $420,000 and you have a balance of $250,000 left to pay on your mortgage. $420,000 minus $250,000 equals $170,000. The difference of $170,000 is how much equity or wealth you've built up in your home. Once you know how much equity you have, you can start to get an idea of how much of it you could access. Lenders usually let homeowners access only part of their equity, often around 80%, though some may allow up to 85 to 90%. How much you can access often depends on your loan to value ratio, or LTV, which is your total loans, like your mortgage and any other property loans, divided by your home's value. Here's how to calculate your LTV. $240,000, your mortgage balance, divided by $400,000, your estimated home value, equals zero point 0.6, or 60%. Most financial institutions want to see an LTV of 85% or lower. Depending on your financial situation, there are several options to tap your home equity. A home equity line of credit, or HELOC, gives you a credit line you can use as needed. Most have variable rates, so your interest and monthly payment can change over time. A home equity loan gives you a sum of money at the beginning of the loan's term. The interest rate is fixed, so the monthly payment will be the same throughout the loan's term. In a cash out refinance, you replace your mortgage with a larger one and take the difference in cash. Homeowners who have a low mortgage rate would have to refinance and take on a new loan, potentially at a higher rate, which can be a drawback. A reverse mortgage is for homeowners who are 62 and older and lets the lender pay you each month instead of you paying them. With each payment, the lender takes more of your home's equity. A home equity agreement is a viable option for those who are looking to access their home's equity without monthly payments. With an HEA, you receive cash up front in exchange for a share of your home's future value. It's also a potential option for those who don't want to refinance and give up a low interest mortgage, or who want a more flexible option to traditional loans. Calculating your home equity isn't complicated, and knowing how much of your home you own helps you understand your financial options. If you found this video helpful, hit subscribe and let us know in the comments what you want to learn about next. Thanks for watching.